Sajid, welcome to the show.
Thanks, Meb. Thanks. It's a pleasure.
It's awesome to hang out with you all the way across the world. Tell our listeners, where do we find you today?
I'm in Indonesia, the capital city in Jakarta.
I was joking with you before this, so coffee for you in the morning. I'm in Los Angeles. Normally would be some wine or beer for me. We have a beautiful family of birds outside my window, which listeners may be able to pick up. One of my favorite podcasts we once did from Hawaii, where there was a bunch of roosters throughout the entire show. So it gives a little color. What's the vibe like there right now? You've been there for a while. I know you've lived in a lot of different places. How long have you been in Jakarta?
Oh, for a while, actually, almost 9 years now. I think it's as a city, it's opening up. The COVID restrictions are almost over. You don't need to do quarantine anymore if you travel here. So yeah, life is getting back to normal. Cafes are full, restaurants are full. Yeah.
Where were some of the stops prior? I know you've I know some of the answers, but tell the listeners where are some of the places you lived all around the world?
So I've spent quite a bit of time in Africa. So I was based out of Lagos, Nigeria, managing the West Africa. So in different countries in Africa, sometime in the Middle East, and of course in Bangladesh, where I'm from.
Awesome. So we're going to talk all things startup investing. It's so fun at this sort of day and age. One of the reasons I was pestering you to be on the show was we joke, we have a lot of some of the top startup investors all over the world have been on the show, and certain deals and characteristics show up from I think a lot of the best ones. And you were new to me, but kept presenting a lot of unique and different investment opportunities, and we've invested together on a handful now in companies all over the place. And so I'm excited to welcome you today. But if I have this right, and you may have to correct me, you weren't always an angel investor, right? A banker once upon a time. What was the origin story for you?
Yeah, so so I started in banking, and which essentially took me to Africa and all these countries. So I was part of an international bank. It's a British bank, but they mostly focus on emerging markets. So while they're trading at FTSE, most of their money they make in either in Asia or Africa. So that took me to all these places. The bank brought me to Indonesia, where I'm based now. And while I was working in the bank, telco company, which is Norwegian telco, again big on south this part of the world, they wanted to build a digital health business. A lot of these telcos are struggling with their core network operations and wants to build digital layers on top of it. So the company Telenor has done some big businesses in financial services in markets like Myanmar and Pakistan. So they wanted me to build a health business in Bangladesh. So I was hired to do that. And then, so obviously I left banking, built a digital health business, which is actually quite scaled. It currently serves 5 million people. So, it's a very large healthcare business. Also one of the largest health insurance book. But I have been investing on the side, for the past 6-7 years. And that's what I do now, do full time.
So how'd the investment journey start? For people kind of arrive at this destination in different ways. We've kind of very publicly chronicled my journey here. How did it start for you? Was it public company stocks, or your college roommate come up to you and said, you know what, I got this great opportunity, invest in my my Bollywood film or my restaurant down the street, or what was the initial foray for you into this world?
Yeah, it was like you're saying, quite a bit of sort of like an accidental investor. So when I was with the bank, a couple of young guys, they approached me. They wanted to build a fintech business, like comparison sites. One of those places where you go and get different comparison of credit cards, and you decide which one to buy, and etc. And they needed some advisor. So they were launching in Indonesia. They wanted someone to advise them to navigate the regulatory landscape, how to talk with the central bank and all those stuff. So I decided to help them out. I joined as an advisor, and 6 months down the line, they were raising a round, and they said, would you be willing to invest? So I wrote my first personal check. Now, that was my first angel investment, so to speak. What is interesting is there were other people on the cap table who have been doing it for a while. And so they showed me the rope, so that, if you're interested in angel investment, you need to do this many companies, this is where you can find deals and stuff like that. So that's how the whole thing started.
All right. That's a pretty traditional path. I feel like, you talk to, and a thoughtful path. I think, getting involved, whether it's operational or sweat equity, is a way that, kind of gets you into the world. We talk a lot about the access is much more ubiquitous at this point versus, 10 years ago versus 20 years ago. You might have been able to join one of these like angel investing clubs or work at a VC. Other than that, unless it's like your college buddy, like you probably didn't see as many, but now, particularly with AngelList and sites like it, it's opening up a whole new world of opportunity. All right, so I think I've invested with you about half a dozen deals, somewhere in that 10 range. Pretty eclectic grouping, but tell the audience what is sort of like your framework. What are you looking for? What's the general investment philosophy that's sort of your opportunity set?
So I think two things, which probably, as someone who has been part of my syndicate, you probably have noticed that my deal flows are pretty much all over the world. So there are, of course, I'm based in Indonesia, but I'm bringing deals from Africa to Latin, and of course from Asia, and then US, right? So I'm broadly agnostic of the geography. In fact, I think there are more opportunities in these markets than the traditional markets where we are more accustomed to invest. So that's one. Second, I have this, I operate from this philosophy that all countries are on the same digitization curve, but at different points. So, it is sometimes quite, astonishing for me. So I talk with a founder in India in the morning, and then I talk with another founder in Asia or in Africa, and they're all building the same business. Probably the similar business model has already been proved in US. So one of the mental model that I use is that, has this model already been proven? And am I only taking an execution risk rather than a business model risk? So that I have found quite helpful in investing in the emerging markets. The second thing, of course, as we have always seen, some of these valuation is a bit out of whack compared to, the traction. So, sometimes I do invest, I do bring in companies on the syndicate where the valuation sometimes is overvalued than the traction, but I think, given the potential and everything. So, but I try to recalibrate that, whether the valuation makes sense. So that would be the second model. And the third one, of course, is the traditional, the founder set, right? So when I'm talking with the founders, one of the things is that I have now invested through AngelList, through other people's syndicate directly. It's almost like 1,400 companies.
1,400?
Yeah. So what happened
you officially have the record, because I asked this question on Twitter maybe like a year ago, because it's listeners may be spitting out their drink listening to this or laughing like I did. However, so I'm like around 320 or 30, been investing since about 2014. But you hit upon something that to me is, we've said this before, it's not a unique insight, but it is a critical insight, which is you need to have a certain amount of breadth, a certain amount of shots on goal to be able to capture this world. And so I actually think, that's, you have the record. Fabrice Grinda, I think, was close to 1,000. Calacanis was in the hundreds. Someone else was, some of the platforms, certainly. That's definitely the record. I love it. That's awesome, man.
Yeah. So what happens is when you invest in that level of companies, you tend to develop, what do you call it? Gut feel when you talk with founders.
Yeah.
And that, of course, always helps. So those are the sort of the tools I use.
I think it's right, man. The amount of pattern recognition and what we tell a lot of listeners, when they're particularly getting started, I said, you should start to just read every deal memo possible. You start to pick up on the good, the bad, the missing, the exaggerated, the interesting, and on and on. And I think I've reviewed something like 6,000 deal memos at this point. But you start to also pick up some pretty interesting signals, and not just from investing, but also things you can incorporate. My team is so sick of me saying this at this point. almost every day. Certainly once a week, I'll send a message on Slack or email and be like, have you guys seen this? Maybe we can incorporate this, this SaaS company into our company, or have you used this personally? Like on and on. I have like, products over here that are sitting here that I've like been trying, make everyone in my family try. They're consistently kind of grossed out by some ideas, but I think it's a very thoughtful approach. And so wait, so what is the timeline like spread on this? Like, was this I assume this wasn't all in 1 year. How many how far has this been spread around?
So yeah, so I started investing in 2014, so roughly 8 years or so.
Yeah, man. Well, all right. Well, you and I came to the plate at the same period. All right. So, it's funny too, though, and I think this to me is one of the reasons I was attracted to you and what you're up to. I look back and, and I had someone go run all the numbers on the portfolio that I've invested in. And I said, location, gender, founders, where they're from, every possible statistic. And I don't know if it's 3 of the top 5, but it's, I mean, like 75% are US based companies for me, but I think 3 of the top 5 on paper still of the best performers were non-US. And part of that was due to the, and I don't know if this will continue for indefinitely, but more reasonable valuation starting points, or just that the opportunity is things where people weren't looking. Like, how have you felt the global viewpoint has evolved over the past 8 years? Are those things you've seen? Has it changed? What's kind of the lay of the land for looking all global and international?
So 2 things. I think, first of all, the so-called emerging market or markets specifically within Asia and Latin, and nowadays in Africa, there are pretty much, you can name any top tier fund, they're all here. So there's a lot of money coming into this space across markets. So I think the valuation is, of course, as a factor of that, is inching up, which, when I started this thing 7-8 years back, the valuation was much more, sort of palatable, so to speak. So that's one. In terms of the growth of some of these companies, I mean, just to probably relate to what you just said, of all the companies that I invested, it will also be roughly 65-70% in US and the rest 30% outside US in my case. But in terms of pure money on money return, the big top 3 or 4 are outside US.
Yeah.
So yeah, so I'm saying the similar thing, probably on a much broader base.
Yeah.
So that's one, and that's probably because, like you're saying, one is, of course, the starting point on valuation. The second, I think, which is very interesting, is some of these companies are such a first mover into the geography that they pretty much control the dominant position. And the third thing is, a lot of these economies are early stage of their growth, right? So the delta is growing very fast in most of these companies because, a lot of these, so just to give an example, one of my best performing company is what they call building a Stripe for Southeast Asia. Now, as these economies are getting more digitized and people are using all the digital services, so the market is expanding. This company is essentially building on top of that growth. So, the rising tide is obviously helping. And because they're first mover, they have a big, market share, right? So all this combination with a low entry point really makes a good investment.
How often do you see that? It seems to me like a lot of times you have, particularly in the emerging markets, a successful idea concept that has been taken and tried elsewhere, and then it often has a pretty amazing immediate product market fit. Is that a traditional business model idea that you're attracted to, that you think is a, because I mean, this goes way back to, it reminds me of some companies were doing this in Europe like 15-20 years ago on some of the ideas, and it doesn't always work out. But is that something that you think is a repeatable sort of concept that can get applied?
Oh, definitely. I mean, if you look at most of these markets, the pitch is essentially X of Asia, right? Or Y of Africa or Z. So it's Uber's version of it for these markets. It's Amazon's versions of these markets. Stripe's version of so yeah, that is that's predominant across these geographies. And then nowadays, what's probably happening is we are seeing between one country to another. So let's say India has a very successful model, and we are seeing now that model getting replicated in Indonesia. Or Indonesia has a very successful model, we're seeing that getting replicated in Africa, in Nigeria, right? So I think the biggest delta probably, I mean, I didn't invest many in Europe, but I think the biggest delta I see in these markets is the huge demographics. So, so Indonesia has 260 million people. You're talking about 1 billion people in India and Africa as a continent. So when you're investing in digital services or companies which cater to such a large population, or companies which are probably helping digitizing the SME businesses, you probably are talking about a business which has a lot of runway, because most of these people are underserved digitally. Most of these SMEs don't have access to a lot of these digital services, right? So there's a huge runway to growth for all these companies. And that's where I think it's sort of the winning formula, so to speak, for many of these companies.
How many sort of generalizations can you make? Because like these geographies are so different, and at various stages of developing, emerging, sectors are different, rules and regulations. How challenging is it for the world to be your oyster? I feel like it's almost easier for some of these VCs, like, what, I only invest in SaaS companies in Boston, all right, well, good. That narrows your universe. For you have the opposite challenge, and it's good because it's a bigger pond to fish in, but it's sort of limitless on, what's going on. So maybe walk through some of the geographies specifically. You mentioned you're everywhere, but that you focus on in particular, or ones that you think are really, the most interesting and opportune right now.
So I think, purely if we go by country, I would say there are 5 countries where I'm seeing most of the deals coming through. One is Pakistan, which is a large, population, growing, economy, a lot of, Second is Indonesia, similar. I'm seeing a lot of demographics, similar demographics. Third would be, you would say, Nigeria within the Africa continent, similar geographics. And the good thing is that I spent 4 years in Nigeria, so I know that market quite well. Then, of course, you have the traditional India, which is a big enough market and growth. And within the Latin context, it's essentially either Colombia or Brazil. So these are the markets. And if you look at, and then of course from Bangladesh, I invested in a couple of companies where I'm seeing similar growth trajectory. Now, if you look at these 5, 6 countries, they're not very, the point you're making, it's not actually very different in terms of where they are. Probably each country is 3 to 4 years apart from other in terms of the digitization curve. But the number of people, the growth rate of the economy, and the trajectory are pretty similar.
It's funny you mentioned that. I have a friend who I love to talk to about angel list deals and others, and it's frustrating that you can't really talk about them publicly. The accreditation and fundraising process is still a little frustrating. And in many ways, I get it, but we text about it, talk about it, and he always laughs because I'm drawn specifically, like the Pakistan deals are so consistently obvious to me. I see so many where I'm like, oh my God, this looks amazing, and I'm always sending him, I'm like, hey, I think I'm gonna do this one. And he's like, dude, you like your hit rate, your batting average on the Pakistan, it's like, it just has to say Pakistan and you'll invest in it. But it's funny because I agree, like exactly what you're talking about. A lot of the, and I don't want to jinx myself. Look, I none of this is, until the cash hits the bank, none of this is finished, of course. But looking a lot of the opportunity sets, and the deals that seem obvious to me, where they're like, wow, this seems like a great opportunity, product market fit, revenues are going up, on and on and on. Latin America, like you mentioned, a lot of the places you're talking about, it's exciting. Okay, so I'm agreeing with you too much. I love to play devil's advocate. It's a little harder with you because I agree with you. But okay, so All right. Now, what about sectors? So you mentioned, I think in the intro, you like payments. What else? Is that broadly fintech, or what's sort of the main sort of places you're attracted to?
So fintech obviously would top the list. And within fintech, it's essentially, I'm seeing two categories. One is payments in general. And the second would be, SME digitization. So anything that helps SMEs to manage their accounts better and books, because it's probably untapped, right? So you have this father who had this small shop. Now the son is taking over, who's more digitally savvy, has an access to a smartphone, wants to use that smartphone, download apps and everything, right? So he's a perfect customer to bring to this digital world. So these would be the two big areas within the fintech space. The second would be logistics and marketplaces. And I think, again, you have one or two big players in terms of marketplaces across these geographies that I mentioned. But then there are opportunities of some niche marketplaces across these geographies, which are up for grab. Same with logistics, because a lot of these countries have an inefficiency in logistics, which can be resolved through better execution. So that would be the second bucket. And the third one, which is quite interesting and which one would thought, I'm seeing edtech coming up recently. There are a couple of edtech companies which has really made a stride. I think mostly driven by, and you see that, right? So you have this Baiju in India, which is a tech account, and then you see the Baijus of X, Baijus of Y, right? You have Khatabook and you see Khatabook of X, Khatabook of Y, right? So Baijus, and we are seeing some version of Baijus across these markets in the edtech space. The 2-3 areas, as someone from emerging market, you thought, okay, these countries suffer or need a lot of improvement in health. You're seeing that these countries would require a lot of support on agri-tech. And then, of course, edtech, right? So we are seeing edtech coming up, but we are yet to see very, big breakthrough companies in health and agriculture across these markets. As someone who's built a health tech business, I know, it can be very difficult to monetize health tech unlike a fintech and others. So, but there's no clear winner yet. And same with agri-tech. I think the reason for agri-tech is mostly because the way the ownership and the decisions are made at a village level is very different in these countries. So to help them bring to the digital world requires a lot of bureaucracies and a lot of areas to go through. So that's probably where agri-tech is struggling. What we're seeing now in countries like Indonesia and others is that sort of like farm to table sort of concepts where people are bringing the supplies together and providing to the directly to consumers. So that model is getting started in a couple of countries with some success, but not a runway success yet.
It's funny, you've mentioned a handful of places. Africa, while obviously more than just one country as a geography, was something we started picking up a few years ago, where we saw the opportunity as being in many ways like a paradigm shift, where it was going from really not so much to all of a sudden something very big quickly. And then of course, over the last year, you've seen I feel like the rest of the world kind of wake up to this kind of discussion. But how much of these various geographies has the culture of entrepreneurship? I mean, entrepreneurship's always been there. You go to a lot of emerging markets, like it's the best entrepreneurs in the world, but meaning specifically like startup style, Silicon Valley mindset in startups. How is that kind of compared across these geographies? Like if you look at it, you're like, you know what, there's this amazing YC branch in Nigeria, but in Colombia it's not. So like how does it kind of compare here in 2022 for a lot of these geographies that you're looking at?
So what's happening, which we are seeing a reverse brain drain in many of these countries. So you're talking with founders who studied in US, worked for some startups in US, and coming back and building their companies. So a lot of these startup founders are very well networked, has a very strong network across the world. I continuously see founders from Nigeria talking with founders in Indonesia, or of course in US or in India, right? So it's in a way as diverse and as wide, geographically distant they may seem. All these founders are quite well connected, and that's probably the beauty of this whole startup thing, because people are very open to collaborate and talk with each other. So which I don't see happened in the traditional, brick and mortar businesses or manufacturing businesses before. So I'm seeing a lot of the exchange of ideas happening. But in terms of your, the question, yeah, there is in all these countries, you'll see a very group. And that, of course, I should caveat that. That does not mean that local homegrown, people who studied locally didn't work out are not good founders. I'm saying some of them are really building very interesting companies, but then they're getting exposed to international, through accelerator program or through funds and others. But I would say many of the very successful companies in these places are done by founders who worked outside, came back and building it. So they're bringing their network with them.
Yeah, I mean, it has this, kind of percolation effect where, you have a success, they get liquidity, maybe not just founder, but maybe, all the way down 2 or 3 levels of operators. And then they start to see investments and on and on and on. So it's like a snowball type of effect. And like you mentioned, like you start to have some of the benefits of like startup templates happening, not just for ideas, but all these people that went to Stanford together or on, and it's having this sort of jump effect, it feels like in some ways in a lot of these countries that have moved from almost like a yellow pen and paper style, business opportunity to all of a sudden digital, and it just goes absolutely bonkers crazy. Some of the adoption metrics and revenue growth on some of these companies is just is really kind of mind-boggling, which is awesome. Like it's super fun to see. Okay.
I mean, one thing I will probably on the point that you just mentioned, one thing which probably lacks, I think lacks especially in countries like, let's say, not really so much in India, but countries like Bangladesh, Pakistan, and to some extent Indonesia, but is the question of the liquidity. So we are yet to see large exits in these markets. Indonesia just had a couple of SPACs of Gojek, Tokopedia, and stuff like that. But a lot of these countries are still so the idea that a big unicorn exit and the early employers coming back into the ecosystem, building another company or investor. So we are yet to see that virtuous cycle working out here. But even then, I think the growth some of these markets are so big that a lot of money is pouring in. And that is helping the growth. One of the theses that I work on is, and being someone from this part of the world, if you look at the people who used to make decisions, at a senior, at a commercial level, at a regulatory level, and others are people who used to own a lot of lands at one time. They had the wealth and the power. Then it moved to the trading people who used to do commodity trades in these markets, and then they accumulated wealth and power. Then it went to the manufacturing. So people who are owning large factories and stuff. I think it's time that this wealth and power move to the technology entrepreneurs, which we have seen already happen in countries like US. And I think that's the 4th level of power and wealth shift will happen in these societies. And that will fundamentally transform how a lot of the society and a lot of the decision makings happen in these countries. And I think we're seeing that starting.
And how much is like the receptivity in the actual countries themselves? I know this is very country specific as we look around the world. Some countries, the citizens and institutions are both, say, like you mentioned, more interested in owning real estate. In some countries, it's more of a stock culture. In some countries, it's gold and, hard sort of assets. Is it starting to be a scenario, and do you get a feel for it, where in a lot of the places, Indonesia and others, where there's an interest in investing in startups in general? Like, is that something you're starting to see, or maybe that you have seen for a while, or not at all?
Yeah, no, I would say it is starting to see in that category. So, it's a long way from other markets. Like I mentioned, it varies from countries to countries within these geographies. But I think these are very early stages. I would still say most of the investments at a corporate level, at a business level, as well as at individual level, are still into the traditional stocks and golds and lands, etc. So startup investment is still very, very tiny in all these markets.
Yeah. So, all right. You have both invested in a gazillion companies, as well as run a syndicate. You also are I believe, in the process of rolling out a fund or have a fund as well. And by the way, I love the name MyAsiaVC. That's such a great, just right on the nose name. But what tell me how you think about these various channels of how to reach both investors and companies. Like, what's the what's sort of the feeling on using all those different sort of routes for fundraising as well as allocation?
So just to give you a bit of a context on my syndicate journey, it all started in June 2020 when when we were in the early days of COVID. So I was stuck in a room, trying to decide what to do. And then I thought, okay, let me launch a fund. But then I thought, with this COVID, reaching out to LPs may not be a good idea. So let me start a syndicate because I was an active investor through different syndicates on AngelList. So I thought, okay, let me set up my syndicate. So I did my first deal in June 2020. Around June 2020. Yeah, so it's roughly 2 years now. And the syndicate turned out to be quite a bit of success, probably because of the timing. Everyone was stuck, everyone was investing. So within the last 2 years, we deployed roughly $50 million, so almost $25 million each year. If you think of a typical fund which invests 5 years, so that's roughly 125 million, of a fund, if you think that way. And essentially, it's one person entity, right? So I don't have any back office, no analysts, nothing, right? So that's what's happening. And it's quite a large LP, 3,000 plus LPs and staff of them, quite a few of them are very active. So that's the syndicate bit. And then beginning of this year, I saw a lot of interest, which actually we didn't touch in terms of sector, a lot of interest in Web3. So I started a Web3 syndicate I think in February of this year. So in the last 2 months, it's already deployed roughly $3.5-4 million, quite a few deals. So these are the two syndicates. Now, what the way I approach syndicate is, so I've seen a couple of syndicates who are very sector stage specific syndicates. So syndicates which say that, okay, we'll only invest in climate at seed stage, or we'll invest in fintech at that stage. The way I run my syndicate is sector, stage, geography agnostic. So it's a very general platform where I bring in deals that I like and which I think would create value. So it can be as early as pre-seed to as late as pre-IPOs. So I do a lot of secondary deals. So it's a very wide ranging. Of course, the geography-wise is very wide, and the sector-wise is from fintech to agri-tech. So it's a very wide ranging. So the way I see syndicate is a more like a buffet sort of thing where I bring deals and I leave it up to LP whether that fits to what he or she wants to do. So if some LP wants to create exposure in fintech, in emerging markets, or in edtech in Latin or in Asia or Africa, so depending on, so I leave it up to the LPs to decide which sector segment they want to invest. So that's my thinking of the syndicate. Then what I started doing is, now if you think syndicate as a big horizontal line, I want to create vertical funds which are specifically focused on different parts of those deal flow. So what I did first is I set up a rolling fund, which is last year, because I was coming across companies who were not very willing to do syndication. So they think, oh, you're sending this to so many people. We don't know who these people are. I don't want to share my data. I want a commitment upfront of how much you're going to invest. So I started the rolling fund essentially to cater to those companies which I cannot syndicate. Then, of course, then the YC deal happened. And not this year. Last year, what happened is I was talking with the YC companies, and by the time I told them, oh, the syndicate has been approved, I'm going to launch it, they said, no, we are full. But after 2 days of syndicate launch, they said, oh, sorry, Sajid, we are full, we can't take any more funding. So then I said, okay, let me set up a YC fund. So this is the first time I did it, a YC venture into fund, essentially to be able to decide and write checks on the spot. So that's the second one. The third one I set up is a Web3 fund. So, when the Web3 syndicates started, I'm seeing a lot of interest in Web3, as well as, I'm seeing people, again, the sort of the similar question, because Web3 is now so hot that a lot of time the deals are just getting, built before even we started the syndicate. So I set up this Web3 fund. Now, the fourth one that I'm working on is a South Asia, Southeast Asia fund, which essentially will focus all the deals in this part of the world. And the way I see it is, as I launch these verticals of funds, that part of the syndicate is slowly moving away and will only go through the fund in most of the cases. So the South Asia, Southeast Asia would take a big chunk of it. So that's the fund I'm working on now.
Awesome, man. So how do you tell me a little bit about the deal flow, and probably now it's well established kind of how you find a lot of the companies, but also give us a little insight into the early days too, like how obviously you've invested in many companies over the years, but as a lead, as someone who's bringing these, what has that experience been like, and kind of how do you source all these deals in which you're finding and investing in?
So mostly from four sources. One, of course, is, like you're saying, the investors or the founders where I already invested. So, their friend is working. So, so I invest in a lot of companies, and they say, oh, Sajid, my friend is launching a similar company. I told him about you. Would you like to talk with him? So that's a sort of one source of deal flow. The second is essentially, people who are LPs in the company, in the syndicate, right? So a lot of LPs who keep referring deals that there's X or Y and they keep referring deals. So that's the second source. The third
And
source
that's cool.
is,
Just to interrupt you for a second, but that's a fascinating,
oh,
resource that not only are they investors, but they're also helping. Like
oh,
we always talk about with companies, this concept of inclusive capitalism, but also from a fund manager standpoint of having a resource of investors and not utilizing it. That's crazy to me, and I think some people are just reluctant to do it. They're nervous or afraid, but as you mentioned, like, you have thousands of investors that not only are giving money but also giving you insight and signal as well.
oh, definitely. And, I mean, the number of deals that I'm getting through the LP base that I have is phenomenal. And, it's sort of like, so I have almost like 1,000 scout or 2,000 scout who are active LPs, right? So they're constantly different deals. So that's the second one. The third one, of course, is some funds who are, I know a couple of those partners and they keep referring deals. They're investing in a company and they have a small, space, and they say, will you be willing to run a syndicate? So that's the third one. The fourth one is essentially where I am reaching out. So I read about some company on TechCrunch or something, and oh, this looks cool. Let me reach out to the to the founder through LinkedIn and somewhere else and get connected. So these are the four four pillars.
How often are they receptive to that? Is that something where a lot of the times they're like, okay, let's chat, or are they just like, dude, what?
Actually, interestingly, on the fourth one, I get a good feedback. I mean, feedback in the sense that almost I would say 75, 80% of the cases, the founder reply. Probably,
Yeah,
they go to the website to look at my,
sure.
I give some link and then they reply. Of those who reply, some of the cases they have already closed the round because it's already in TechCrunch and everything. In other cases, they say, yeah, we are going to launch it or do an extension and stuff. So, yeah, some of the cases.
Um, that's awesome, man. Well, it's gonna be exciting to watch all these avenues develop. If you're willing to, I would love to hear, and mainly as almost like a case study sort of insight, um, any of the companies that you've invested in over the years that you think are particularly insightful. You're like, hey, I invested in this company and this geography, and this kind of illustrates how I was thinking about XYZ. Is there anything that comes to mind that you think is a pretty good insight into the way you think?
Oh yeah, I mean, so so one would be a company called ShopUp in Bangladesh. So this is a company which I invested very early, almost at a pre-seed stage. So they essentially started. I don't know whether you know of a company called Udan in
Mm-hmm.
India. So Udan is a B2B marketplace. So they started. So ShopUp essentially started as a Shopify. So there are a lot of people in Bangladesh who use Facebook to sell items. From housewives and others, they use this, to sell clothes and stuff. So ShopUp started being the Shopify of Bangladesh, giving these people, front door digital store and stuff like that, and taking care of their backend logistics. From there, it started to become a sort of like a Udan concept with B2B marketplaces for all these people to buy and sell things and stuff. And from there, they have also now started a big logistics arm because they found that logistics needs improvement. And then of course there's a fintech play of buy now pay later, which is coming in. So so when I first heard of ShopUp, when I invested, it was more from a concept of, okay, let's invest in the Shopify of Bangladesh, because I could see the number of people who are doing their businesses from home. And then of course it evolved to the extent that they did probably one of the largest Series B in the region, given that, from Bangladesh, which has been relatively ignored to that extent. And you pretty much name from Sequoia to Tiger to, pretty much name all the tier one VCs who joined. So, so this was one of the, big stories coming out of Bangladesh. So that's one.
Well, I mean, it's fun, like even talking about Bangladesh, like the size of some of these emerging markets, and obviously India like is a whole nother level. I mean, I remember talking to someone years ago on the podcast, and there was just like a statistic, which was India has more fantasy sports, people playing fantasy sports than in the US. I'm like, how is that possible? The US is such a, and they're like, there's more fantasy sports people on like cricket or like one, like, just because there's so many people at automatically. And you start to like, think about some of the opportunities in particularly countries that have huge population, but not as developed. And you can kind of, the numbers all of a sudden get very interesting quick, right?
I mean, I'm very bullish on the next wave of Web3 companies coming out of India, because there was a bit of regulatory uncertainty, which seemed to be clear now, with the government coming out with a very clear tax jurisdictions and what would be taxed and not. So I think that's going to be a big space. Like you're saying, fantasy leagues and stuff, which was really coming. And there's a big sports community in India, and same in Indonesia. And I think built on that, there'll be a big wave of Web3 companies coming out of that region.
Yeah. All right, let's hear another one, man. What's another interesting company, and what are they up to?
I think the second one would be a company called Zendit, which I was mentioning previously. So again, I'm an early investor and advisor to the company. It's one of the YC top 100 companies that they publish. Again, I mean, when I first heard of the idea being pitched to me across a table, it was more of, okay, we want to facilitate payment of all these small mom and pop shops in Indonesian economy. And then, of course, they started, building that one-click, payment options and stuff like that. And then, it exploded as the digitization and the usage of data sets exploded in the country. Now, of course, it started in Indonesia, expanded to other markets within Southeast Asia. It's now a unicorn, which was it reached unicorn last year. So, again, an explosion. Huge sort of transaction happening through the company, and a really big business. And I think it's I look at some of the numbers, which is staggering, and I think it will only continue to grow. It has a long runway in the coming years.
What's
the second one?
Yeah, well, I mean, I keep going. I could listen to these all day, but give me a third while we're at it. Let's do the Trinity. Who is the what's the third one?
The third, so probably to a bit of spice in it. So the first two are the ones I did not syndicate, because it happened before I syndicated. The third one is one which I syndicated. Is a company called Spenmo. So Spenmo, is and now it is getting very popular, right? The breaks of the word, that version of it, right? So Spenmo, again, a YC company which I syndicated, and then they of course started providing the accounting, back-end services to help all these mom and pops, not the mom and pop shop, SMEs, to better manage their accounts and everything. And then from there, they started, issuing corporate cards to better manage the expenses. So again, Spenmo is one of the top, YC list and etc.
And what geography is that?
Singapore. So I mean, again, in the Southeast Asia, but based out of Singapore.
The bad news is the other 1,397 companies are going to be like, what the hell? You didn't mention me. These are the three you picked. This is the problem with having too many children, man. You got too many kids under the household.
But I mean, some of these companies, I mean, I mostly mentioned from Asia, but some of these companies from Africa are phenomenal. I mean, I invested in some of these African companies. There's one which is called Relief. So the reason I mentioned Relief, it's a very different. They're trying to streamline the supply chain of palm oil, which is a big business at that part of the world, and you don't see a typical startup.
It's a big business in this part of the world, and it was in the news today where I forget which country it was, just announced they were banning exports because of all the supply chains and everything, and palm oil. I forget where, I'll look it up, but tell me more.
So, so the Relief is, one of the companies is out of Nigeria, Lagos. So they're, because it's a big palm oil producing country. So they're trying to streamline the palm oil production from a very agricultural level to manufacturing level, and how to streamline that and reduce the waste. So, yeah, so, it's a very hard problem to crack, and it's not those typical, financial services or the Web3 companies, which is very different. So there are some companies like that. There are quite a few companies in renewable energy space across these markets, which is quite interesting, solving the hard problems and stuff, and similar patterns.
I'm having a little FOMO because I remember seeing this palm oil startup, and I was like, this is outside of my wheelhouse about as far as it can get. And I come from like a farming background, and I love anything farming related. And I hemmed and hawed about this one for like usually for me, it's an instant no. Some I'll do some due diligence. This one I was like spending an inordinate amount of time with, and didn't do it, much to my probably eventual regret. But that was one that I remember reading that. I must have read that write up probably 15 times in the deck. And I was like, man, this seems really thoughtful and smart. And then, so I'll get it on the next round as we go through.
Definitely.
One of yours, which fits like a much more traditional startup, US based, that I had actually seen elsewhere first, ordered the product, and this is NutriSense. So shout out NutriSense. And with any of the product or services that I can actually try out, I use them just to see, because often I'm like, oh, this is terrible. This food is disgusting. Why would anyone use this? And so I had tried out the NutriSense, and I was like, oh, this is very clear and obvious. This is going to be huge. And then was just waiting to see somewhere this come across my desk. And so thank you, because that one I love, and is one that listeners, it's a blood glucose monitor. You've probably heard me talk about it before. And it's a pretty cool, I think it's going to be a rocket ship. So, or it is a rocket ship, and I think it's going to
grow. Yeah. Going very fast.
What's you don't have to say the names, but you got any 100 baggers on paper yet out of that 1,400 investments?
I think it has 26 unicorns or so, if I recollect correctly. I mean, a lot of these are not through my syndicate, through investment other syndicates, etc.
Sure.
Within my syndicate, yeah, I mean, there are quite a few 100x. It seems like going, because my syndicate is 2 years old. So
you're young. You're a toddler at this point, just learning how to walk and crawl at this point. But how many of you syndicated to date so far?
Oh, so around 230 deals. So
that's incredible.
So everything is in.
You're like a one-man 500 startup.
Nothing below 100.
This is awesome. Oh my God, I love it. But it's funny. I mean, in a world of power laws, like it's got to be a numbers game.
But that's why I think the syndicate is a bit tricky from LP angle, because because LPs are essentially investing in one company rather than a pool of a lead, and then getting either the upside or downside based on the single company performance. And I think that's where the challenge is from an LP perspective, is if for a syndicate lead like me, where you have a volume of deals coming through, is to decide which one you want to invest. So myself as an overall syndicate might do very well, given the number of deals, and they're always within that 2-year syndicate, I'm seeing 2-3 companies really breaking up. Probably will reach 100x very soon. And then of course, then the question is that whether the LP were into those 2-3 companies, and that's where I think the syndicate versus the fund dynamics come through or segregate. And that's why I'm building this fund vertical more to help LPs to essentially get exposure to my selective deal flows and pay at all those levels and stuff.
So talk to the investors out there who are individuals who have haven't invested in 1,400 companies yet. So talked about like some of your advice, like you want to give some people that are either newish, interested in angel investing, even, you know, some of the pros too. What are some of the lessons learned, some of the things you maybe wish you knew a few years ago, or you changed your mind on, all these sort of things? What's some perspective on somebody who's been at it for almost a decade in the trenches and now doing it for a career as well?
So I think almost all the investors have heard that, but it's more about creating the portfolios. It's not about 1 or 5 companies. Ideally, you know, 35, 50, 40 companies, you know, depending on the disposable income that individual has. So that's one. Second, of course, is what I've seen is, and where I have seen my good decisions, or the decisions that I really, you know, where I'm getting outside returns is where I had taken time. I know the syndicate sometimes creates this FOMO thing. You know, it's getting close, the last check and all those stuff. So it creates an unnecessary FOMO in the system. So my suggestion would be to investors to really take time and be convinced that he or she wants to really, you know, invest in that company. So, and, you know, and I would suggest to reach out to the syndicate lead to say and ask questions. I think that, you know, that's important because at the end of the day, you know, I mean, investment is quite a bit of luck, despite whatever we say.
Yeah, you know, one of the things that I wish, if you could go back 8 years ago, I wish, you know, once I got to the go, no go decision on the investment, so I'm going to invest, that I could then rank it, you know, maybe 1, 2, 3. 1 being I have like utmost confidence, 2 being like, you know, I think this may work, and 3 being like, or whatever the system would be, 1 to 10. And I'd be curious to see how much correlation there is between eventual outcome. You know, I think it'd be different. I think it'd be different between all the deals, because like there's certain plenty I see where I'm like, this is the dumbest thing I've ever heard in my life, and it's, you know, spending $1 gazillion, like what, yada yada, right? Like versus the ones where I'm like, okay, this seems like it has a chance. Anyway, I don't know the answer to that. How much correlation do you think you would see with yours? Do you think if your initial optimism versus kind of the eventual outcome, do you think it's a high R squared regression, or something where it's like a little more randomness involved?
I think, I mean, there is some randomness, but you know, the 3 examples that I gave of the companies, which are all you know, going to be unicorn or already in unicorn, in all these 3 cases, I probably made decision within the first 10, 15 minutes after talking with the founder. Because, you know, I talked to the founder, I felt like, okay, this is going to work. You know, I like this guy, that I like the space, and I invested, and they all turned, you know, I mean, there are cases where it didn't, but all these 3 cases, you know, it turned out to be good. And, you know, that's mostly because, you know, the way the whole startup investments work, right? So you need 1 winner in a pool to make it work. So that's how it helps. But I have seen companies where, you know, I let it go, which ultimately turned out to be a big winner, is essentially because, you know, I was overthinking it. You know, I was overthinking, okay, should I invest? Should I, you know, and then let it go. And then ultimately those turned out to be big winners. And that's probably, I mean, you know, it's a sort of memory thing because, you know, I regret those decisions and we probably remember those regrets more than the winner. So, you know, so whenever I see a next company doing very good and I had a chance to invest and didn't, I said, so those happen, yeah. But, but, you know, I mean, if you create a portfolio of 50, 60 companies, it's very likely that you'll get more than principal, you know, 2x, 3x, depending on the winner set.
So as we look out to the future, are there any ideas in particular you're just chomping at the bit to fund, where you're like, man, I'm just waiting for the right founder, the right opportunity in this space, or any areas that like you're really, particularly industries, whatever business models that you're really excited about in here in 2022?
I think, I think one of the areas which would be good, and I'm sure there are, you know, I'm starting to invest. In fact, the fund that I raised up on the Web3 side is to invest in companies which are more building the infrastructure of Web3 rather than all these, you know, B2C apps and etc. Like that. So, you know, so the DAO is a big concept now which is coming up. So anything that is helping to help DAO manage better. So if you're considering DAO as an office, so, you know, what is the MS Office of DAO? What is the, you know, Slack of DAO? What is the, you know, team of DAO? What is the, so anything that is helping that DAO to operate, I think is going to be big. And I'm actively looking for companies in that space to invest. So I think, so that's one area. The second area of the similar thing would be, when in this part of the world, in the emerging markets, I'm always looking for a big agri-tech companies, agriculture companies, which I'm really convinced to invest, because I think that's a big opportunity, but we are yet to see, good, founders set there. So that would be the second one, purely from a Web2 angle. And of course, purely from a, moonshot angle, I mean, I haven't done many in space, but I think that again is a big one. I don't see many space companies coming out from this part of the world because of the infrastructure is not there. But from US and others, I mean, I'm an early investor from other syndicating companies like Axiom Space and others, but I think there are more opportunities there.
Yeah, space has been another one. There's certain, signals you pick up on where you're just like, wow, it's having its moment. And space seems to be one that's going to be exciting for years to come, as we start making it to Mars and the on out. We come out of COVID, like you said, you like teleport back to pre-COVID and say, man, you all of a sudden you're got all these syndicates and funds and different ideas going on. Anything got you curious, confused, excited, nervous as we look out to the horizon for you? I mean, what's the eventual build out of this? You seem pretty busy. You're gonna add some team members at some point. Do you have a support staff, or is this gonna remain a one-man show for a while?
So yeah, so probably just a caveat there. So Syndicate, everything is one-man show, but the two funds. So one is this Web3 fund where I have a partner now, and on the MyAsiaVC fund, which I'm planning to do South Asia, I already have founders, so partners, because I think these are the more conventional build infrastructure on that. But yeah, I mean, COVID has been a boon for many. I regret not investing in some of the companies in early COVID days, from buying that ape to others. So I was like, okay, but anyway, so there are quite a bit of mistakes there, but I'm really grateful of the way it turned out in terms of going to full time into this investments. And I see, of course, I mean, if you look at some of the companies which really shined, I don't know whether you've seen companies like Hopin and others, which is now being traded at a significant discount at secondary level. So a lot of the companies which really came out at that stage may get challenged in the coming days in subsequent funding. We are seeing that reflected in public markets, and I'm sure it will reflect in private markets too. So we'll probably go through a difficult time for the next 12 months or so, depending how the whole Ukraine, the whole inflation, this whole COVID situation in China, everything shapes up. So there's quite a bit of uncertainty out there. But I'm a very optimistic technology investor, and I think this would on a longer enough time frame. And as a startup investor, I'm always looking at 5 years, 10 years time frame. I think we are in a good position. So I want to do this more, with all the funds in the pipeline. I want to really build a sort of infrastructure. The way I see my investment portfolio over time is we will have the syndicate to do more and more specific deals which doesn't fall into the fund thesis, and then have this fund. So I have a Web3 fund, I have an Asia fund. I will probably at some stage do an Africa fund and stuff. And for each of this fund, I'll probably bring in partners who are more expert in that space to do that. So
awesome.
So that's the plan.
What, as you look back on these 1,000+ investments and others, by the way, we don't have to narrow it down to this. What's been the most memorable investment? Good, bad, in between? Anything come to mind?
Yeah, I mean, I think the memorable one would be the one that I mentioned. One is where we invested in companies very early, sort of like a first or second check, and really been involved. So so there you get to really, unlike being part of another syndicate, when you're writing your personal check directly into the company and see it grow. So that really is a big of.
Good. You got to pick one though. I'm holding I'm holding your feet to the fire, and it doesn't have to be the best. It could be the worst, but something that is memorable, seared into your brain. I actually don't even remember I can't even remember my first angel investment. I'm gonna have to look that up.
Yeah. I mean,
Um,
the one that I mentioned before, the one which brought me to the investment in the first place, right? So that company ultimately didn't end up well. So,
you said
that
it
was,
did or did not end up well?
it did not end up well, So,
Uh,
so it was
well, but
ultimately, but it started my journey. So,
that's part of it, man. Like
yeah.
it's funny because you talk to everyone in this world, and the expectation is that many, if not the majority, will fail or not do much, right? Now you talk to every startup founder and they realize that stat. They say, I understand most startups will fail, but mine won't, right? Like, it's this
Mm,
great cognitive
right.
dissonance, but like you have to have that sort of confidence, and we like to call it naive optimism. But um but part of it, I think, for a lot of people who are just starting out angel investing, that part is hard for them to see the
Mm,
companies not do well and fail, because a lot of these founders you're cheering for, and it's a struggle. My favorites are the ones that sort of fail with class and integrity. They keep updating and say, look, this sucks, but it's not working and we're losing money and we're going to go bankrupt, but like are honest about it. The ones that, and I would invest in all those again, like those founders,
mm,
probably more so as they have the scars. The ones that really frustrate me are the ones that go full ostrich, just head in the sand, pretend like nothing's happening. But it's hard, it's a very emotional thing. And so um
I,
the
yeah,
that's why it's a numbers
yeah,
game as well, though, as from the
yeah,
investor side.
yeah. I agree. I mean, I one of the things that, now that I have not the companies I invested, for other syndicate or personally, but the companies I syndicated in the last 2 years. And what I'm seeing is, there are clearly three groups emerging. One is, of course, the founders who are, they're doing very good. You can see the valuations update and the numbers, the balance sheet numbers and everything. So that's very strong. So the second one I'm seeing where some of these companies are going a bit silent, or they're pivoting in others, but they're struggling. And we know that they're struggling, but they keep you updated of what they're doing. And then the third group are essentially, like you're saying, sort of going silent, and it takes some time to follow up and see where they are. There is another, I sometimes, the question of integrity, that's very interesting to me, because there have been, I think, one company in my portfolio where, and you have pretty much all the tier one investors there, and they are now looking into the company accounting. So, that was quite an interesting thing for me. So sometimes you look at all these investors, the institutional investors on the cap table, and they're on the board, because I'm not in the board. The check is too small.
Yeah.
And then you have these issues coming up, right? So that was quite an interesting one. Yeah.
Awesome. What's the best place people want to reach out to you for? A, to sign up for your syndicate, B, to send you big checks for your fund, C, to send you deals, and lastly, to potentially join you as a partner in one of these new funds. What's the best place to go?
LinkedIn. So I have, LinkedIn. I'm quite open. LinkedIn and Twitter. Those would be the two big ones. And then, of course, Angel List is, I don't know, many of them, if they're accredited, then go to Angel List and syndicate. But yeah, LinkedIn and Twitter would be the two where I'm always
And
there.
don't forget myasiavc2.com.
Yeah, yeah.
We'll add
So
all
that
the links to the.
website so that website is, it was good. So I'm just revamping the website with the new fund details. So it's a bit work in progress. Some of the numbers are pretty, it's not fully baked yet. So. Yeah.
Hey, no problem. Well, we'll add you all the links to the show notes. Um, this was a lot of fun. I had a great time. Looking forward to seeing you in the real world one day. I've never been to Indonesia, so I'm going to hit you up to be my Jim Rogers style startup tour guide when I make it over there. Thanks so much for joining
Definitely.
us today.
Definitely. Thanks, Matt. It was a pleasure.